Hi, welcome back to Joe Blogs. This video is the next in a series looking at the financial implications of Russia's invasion of Ukraine on the global economy. And in today's episode, I want to talk about the sanctions and ask the big question, will the sanctions actually damage the Russian economy? Or will Russia be able to bypass the sanctions that are in place by striking stronger trading relations with China and India, the two biggest countries in the world? So in this episode, we'll look at exactly what sanctions are currently in place, both the financial sanctions, the trading sanctions, and also the unofficial sanctions that countries have brought in as a self-imposed measure. We'll talk about what the impact of the sanctions have been so far and what's likely to happen over the next 3 to 6 months as the full weight of these sanctions starts to feed through. We'll then look at some of the other countries that have been sanctioned over recent years and what the impact has been on their economy. And then finally today I'll wrap up with my summary as to what I think is the most likely outcome from all of this and what the impact will be on the global economy. So before we get started on all of that, if I could ask you to give me a thumbs up at some point during this video if you're enjoying the content, and also please subscribe if you haven't done so already. Don't forget I always include chapters, so if there's a section you're not that interested in, it's really easy to skip over it. And if you'd like to support the channel, please have a look in the description below where you'll find links to Buy Me a Coffee, Patreon and YouTube's Super Thanks feature. Following Russia's invasion of Ukraine on the 24th of February, a variety of sanctions have been introduced by the Western world. And the Western world was waiting for this to happen. Russia had been building troops on the Ukraine border for a long period of time, so there was some planning that went into these sanctions. And also because of the previous invasion of Crimea in 2014, the Western world had experience of bringing sanctions in against Russia. Financial sanctions were brought in very quickly, and the biggest and highest profile of all of those was excluding Russia from the SWIFT payment system. The SWIFT payment system is a Belgian-based financial system which allows money in all currencies to be moved around the world between different banks. Excluding Russia from this payment mechanism meant that it became very difficult for Russian companies to both receive payments and also make payments. Exclusion from this payment system has definitely made things more difficult for Russia. It's now more tricky to move money. However, there are alternatives. As I mentioned at the start of the video, sanctions were applied against Russia following the invasion of Crimea in 2014. And as a direct result of those sanctions, Russia established its own alternative ruble-based international payment system called the System for Transfer of Financial Messages, or SPFS, in 2014. Now that system has not grown significantly and is not currently a major competitor to SWIFT. However, the demand for gas payments to be made in rubles from all unfriendly nations has meant that there's now more demand for a ruble-based system, and Russia will be hoping that this gives more credibility to this ruble-based system and that it now has the potential to grow to be a genuine competitor to SWIFT. The other alternative to Russia's ruble-based system is the Chinese system, which is based on the Chinese yuan and is called the Cross-Border Interbank Payment System, or CIPS. This Chinese system is currently operated by 1,280 financial institutions, which is significantly more than the 400 users of Russia's SPFS. In addition to the actual movement of money, the payment systems, the other major financial sanction that's been brought in against Russia is that they are no longer able to access the international bond markets. So this means that Russia won't be able to raise large amounts of international debt. However, historically, that's not been something that Russia has done a lot of. It currently has around $40 billion of sovereign debt, which is relatively low given the size of the country and the economy. So overall, in terms of the financial sanctions, it looks like Russia does have some alternatives. There are ways to move money without using SWIFT, and Russia doesn't need large amounts of international debt in order to fund its growth. Russia has a large amount of natural resources, and the two most valuable that it has are oil and natural gas. And because Russia is such an important supplier of both of these commodities to Europe, the sanctions that have been applied so far have been a bit mixed. We've seen full sanctions imposed against Russia from the USA, Canada and the UK. So they have completely stopped buying all oil and gas products from Russia. However, the response from the other European countries has been very mixed. Germany and Italy have very large exposure to Russia in terms of natural gas. They need to buy it to produce electricity, and they also need it for their industry and their consumers. And switching off the natural gas overnight is not something that is viable for either of those countries. It's fed directly to them in pipes in a gaseous form, which means that it's very low cost. And replacing it with liquefied natural gas is going to take time and is going to be a lot more expensive, because it needs to be moved in liquid form, and then you need to convert it back into gas, and then you need to feed it into your network and feed it into all of the people who need it. So it's a really tricky process for them to be able to move away from Russian gas purchasing. And the situation with oil is very similar. Oil is also fed by pipelines to Europe and is the lowest cost available to any of these countries. The EU has made a statement that it would like to stop buying oil from Russia, but there is no firm timeline right now as to when that is going to happen. It will be sometime during 2022, probably. However, as we stand right now, a lot of mainland Europe is still buying oil directly from Russia. So the sanctions aren't really fully in place and are not being operated effectively right now to be able to put maximum pressure on Russia. But there is clear intent from the EU that they want to stop buying gas and they want to stop buying oil. So by 2023, it's very likely that we'll see the volumes of oil and gas being purchased reduced dramatically. Potentially, the gas supplies could be fully replaced. By then, if we've got enough stocks built up in the main countries, then they could switch off that supply. And similarly with oil, they're looking to replace all of the purchases with purchases from other countries. So Russia is fully aware that it needs to find new buyers for oil, and it's already starting to move bigger volumes to India and China. However, it's having to give those countries significant discounts in order to encourage them to take those purchases. Now, as it stands at the moment, the price of oil has increased dramatically. We've seen more than a 50% increase in the price of a barrel of oil. So Russia can afford to offer discounts right now. And it's reported that it's been selling oil to India at $35 discount per barrel. However, as the price of oil has gone up by at least that amount, on a net basis, it's still receiving roughly the same amount as it was prior to the war starting. So when you look at it in those terms, it looks fairly straightforward that Russia can now just start selling large volumes to the two biggest countries in the world, and even if they have to discount against the current high-level prices, they'll still be making more profit than they were previously. However, the key question here is what is going to happen with regards to the sanctions once the European countries get themselves into a position where they're able to walk away from all of the Russian purchases. Because it's only really at that point that the Western world will be able to start applying these sanctions properly and taking some more positive action against Russia. So I'll come on to that point in more detail at the end of this video when I provide my summary as to what I think is likely to happen over the next 12 months or so. One of the other forms of sanction that Russia is experiencing right now is the ban on all exports from the Western world. So a lot of companies have come out and made public statements that they no longer want to carry on doing any business in Russia, they don't want to make any sales in Russia, and they've closed down a lot of their operations that are in the country. And in addition to those statements, a lot of the logistics companies, the shipping companies and the container companies have also come out and stated that they no longer want to do any business. So this has led to a dramatic fall in the amount of imports for Russia over the last couple of months. And to try to counter this, the Russian authorities recently came out and changed the legislation in the country to allow parallel imports, or the grey market. So what they've said is it's now legal to import brands from the Western world irrespective of whether that brand wants to make any sales in Russia. If their suppliers can find the quantities and import them from any country they like, then that is fine to do so. So Russia is trying to find a way around it, but there are some issues with that with regards to the quantities and the price of those imports, and also checking to see whether or not those imports are genuine. One of the other major forms of sanction against Russia now, and one of the most concerning from the Russian authorities' perspective, is the blocking of all technology. We live in an interconnected world today, and we have specialists who are very good at designing and developing new ideas, new concepts, and taking things to the next level. If you think about how quickly your mobile phone has changed over the last 4 or 5 years, you look at various other forms of technology, things move on at a very rapid pace. And that's because we have experts who are all working together and trying to take things to the next level. And depending on the industry and the type of technology, we've got specialist hubs all over the world. So it might be in Silicon Valley, or it could be in Oxford, or it could be in South Korea. There are a variety of hotspots that specialize in certain sectors. And the sanctions that are currently being imposed against Russia are aiming to stop all of this top-level technology from making its way into Russia. So if something is being developed in the USA, or the UK, or South Korea, or Taiwan, then the idea is to prevent that technology from being available in Russia. And over the medium to long term, that will cause major problems in Russia because they won't be able to develop as quick as the rest of the world, and also they will struggle to replace and update things from their existing technology. So this potentially could be one of the biggest impacts from all of the sanctions that are being imposed right now. The final issue I wanted to touch on in terms of the sanctions are secondary sanctions. So at the moment we only have primary sanctions. Each country that's signing in to take part in the sanctions is stating exactly what it will and won't do with regards to Russia. Secondary sanctions is essentially a policing system which says to countries that have not signed up to impose sanctions themselves that if you continue to do business with Russia, then we will apply sanctions against you. And the obvious examples here are India and China. So if the Western world decides that it wants to impose secondary sanctions, it will make a statement directly to India and China saying that if they do any future business with Russia, then essentially they will be subject to exactly the same sanctions that are being applied against Russia. So this is basically a threat that says you should not be doing any business with Russia, and if you do, then you will be sanctioned also. And this is really the last resort for all of the Western world. If secondary sanctions are imposed, then that would mean a complete lockdown on Russia because nobody would be able to do any business with it. So let's talk about some other countries that have had sanctions applied against them and look at exactly what has happened to them. This table shows the 10 countries with the largest oil reserves in the world. Now we all know that oil is a highly valuable commodity and in high demand. And therefore you would expect that the country at the top of this list should be the richest country in the world. Venezuela is estimated to have over 300 billion barrels of oil in its reserves, which means that it has almost 3 times the amount of oil that Russia has and almost 5 times the amount in the USA. However, Venezuela isn't the richest country in the world. In fact, it's in economic crisis. Now, there are a number of factors that have led them to be in that position. However, the sanctions that were applied against Venezuela in 2019 have been a massive contributing factor to the downfall of the country. One of the major problems that Venezuela has faced over the last few years is the lack of investment. As soon as the sanctions were imposed, it meant that all overseas companies walked away from the development of oil in the country. And that has caused major problems and the industry has started to fall apart. Now, there are some direct comparables here to what's going on in Russia. As soon as the sanctions were announced against Russia, the majority of the oil majors came out and made statements that they were no longer investing any more money into Russia, and most of them have actually stated that they want to exit from the country. So we saw BP walk away from its $25 billion investment. We've seen Shell do the same thing, as have Exxon and Total, the French company, have stated that they'll no longer be making any new investments. So there's already been a scaling back of the investments, and the problem with that from Russia's perspective is that there is an expertise that it's losing, and the risk is that all of the facilities start to get older and less efficient, and it has a negative impact on the actual amount of production. But in addition to the investment side of things, Venezuela have also found it difficult to find markets for their oil. And the issue with oil is that once you've set up a rig and you have everything in place, you need to keep producing large volumes of oil to make it cost efficient. And there is nowhere to store that oil. So you need to have a market to be able to sell those massive volumes into. The oil goes onto tankers, and then you need those tankers to be taken to refineries, unloaded, and then you can keep that process going. If you can't find buyers for your oil, then your tankers will fill up and you won't have anywhere to be able to deliver it to. So that means the shipping companies will stop taking your oil, and you soon get to a position where you've got no outlet for it, and therefore you have to switch off the drilling. And once you do that, then you've got major problems switching it back on. And this is one of the problems that Venezuela have encountered. Prior to 2019 and all of the sanctions, they were pumping around 1.5 million barrels of oil per day. We don't have firm figures because they're not published by Venezuela, but it's estimated that the production levels are now significantly less than 1 million barrels per day. So although there are ways to be able to sell your oil even if you are sanctioned by using secondary traders and disguising it as somebody else's oil by putting it through Malaysia, for example, the sanctions will still have an impact because it slows down the movement of that oil, and therefore it could have an impact on the amount of production that you're able to keep pumping out. Jumping back to the list of the top 10 countries with the largest oil reserves, we can see that number 4 on the list is Iran and number 5 on the list is Iraq. And both of those countries have significantly larger oil reserves than Russia. Now, both Iran and Iraq have faced world sanctions at different times over the last 20 years, and both have suffered as a direct result of that. Their oil industries have not been developed at the same pace as they would have been without those sanctions, and the markets that they can sell into are still limited. And that's had a negative impact on both the oil industry and also the economy of both of those countries. I recently posted a video on Iran and I talked about the severe problems that it's encountering right now, partially as a result of the sanctions that have been applied against the country, both financial and oil related. I just wanted to return to the point of Russia selling more oil into India and China. There's no question that since the start of the Ukraine war, there has been a big increase in the amount of oil being sold into India, and we're now also starting to see an increase in the amount of trade with China. Daily shipments to India hit 674,000 barrels in April, which was more than double the amount in March. Over the same period, daily loadings to China increased by 10% to 781,000 barrels. And this chart shows the current attraction of Russian oil to both India and China, as it's being sold at a significant discount to market rates. So what's the summary and conclusion today? Well, there is absolutely no question that the sanctions are having a negative impact on Russia right now. The financial sanctions that were brought in immediately after the start of the war had a big impact. It stopped all of those payments from being made backwards and forwards and has reduced the amount of revenue that Russia has earned. The trade sanctions have also had a negative impact, and that's why we are looking at a major contraction in the Russian economy. It's estimated that GDP will fall by at least 10% this year. However, the big question is, will these sanctions have a long-lasting impact on the economy, and will they cause the Russian economy to break? In order to answer that question, we really need to look at whether the sanctions are fully baked right now or whether they've still got some room for growth. And where we are at the moment is that most of the European countries in mainland Europe are still dependent on Russian oil and gas to a certain extent. Certainly Germany and Italy can't walk away from those supplies during the course of the next 6 months, because if they do, it will have a seriously negative impact on their own economies. So they've painted themselves into a corner to a certain extent at the moment. However, moves are currently afoot to try to change that. So whilst we've got the current situation going on, Russia is able to divert the sale of its oil and some of its liquefied natural gas to Asia. So it's able to sell to China and it's able to sell to India. And both of those countries are taking those deals because they're being offered big discounts and it makes economic sense. It is a no-brainer for India to be buying large quantities of oil below market price. But that situation won't go on forever. As soon as we get to the point where Germany and Italy are able to cut their ties with Russia, then we will see the sanctions being ratcheted up to the next level. And it will be equivalent to the sort of sanctions that we've seen imposed against Venezuela. And where Venezuela is right now is that they don't have anywhere to sell their oil into officially. So they're still selling some of it through the black market, the grey market, whatever you want to call it. So they send it to Malaysia and then it gets disguised as Malaysian oil and then it gets passed on to China. But fundamentally, they're selling to China through a third party. But that doesn't mean that the economy of Venezuela has been unaffected. In fact, the economy of Venezuela is completely bust at the moment. And the reason for that is that they were geared up to be producing massive volumes of oil. They wanted to produce 1.5 million barrels of oil per day. But there just isn't enough market for them to be able to sell that into. And that's meant that they've then had to slow down production, stop production, and that's caused major problems with the whole sector in Venezuela. So for these sanctions to be truly effective, Europe needs to get to the point where it's able to walk away from all the Russian supplies, and then it can start applying the sanctions properly. It can apply secondary sanctions against India and against China. So that means that they will be told, if you carry on buying oil directly from Russia, we will stop the supply of microchips and other forms of technology and other supplies that you need for your economy. And that will make those countries think twice about buying that Russian oil. And at that point, the sanctions will be fully baked and they will have the biggest impact possible. And that's where we're going over the course of the next 12 months. So Russia is already suffering. In the next 6 months, they will be suffering from the fact that they can't get certain things imported and they will start running out of the supplies that they've got. So we're already seeing that impact, but it will get worse over the course of 2022. But as soon as we get to the point where the secondary sanctions are switched on and China and India have to start complying with the international sanctions, then that's the point that Russia will feel the full effect. And in addition to those trade sanctions, which will cut off the amount of revenue that Russia is able to earn from its sale of oil and gas, the technology sanctions will start kicking in over the course of the next 12 months. So Russia will not be able to access the same level of technology and development that it's been able to get historically. And we've already seen the head of Russian central bank coming out and talking about reverse industrialization and the fact that technology is likely to slow down and potentially go backwards. We've got issues such as Airbus and Boeing. They're no longer supplying any of their replacement parts to Russia, so they've got major problems with regards to flying those planes and keeping all of the registrations current, and that's likely to apply to a lot of different sectors. And as Russia experiences those problems, it will start losing its competitive edge globally. And that problem, combined with the ongoing effect of the sanctions, will really start to cause a lot of pain for the Russian economy. So the overall summary here is that for the sanctions to operate effectively, they need to be fully baked, everybody needs to be on board, and the secondary sanctions need to be applied to all of those secondary markets that Russia can turn to in the event of losing all of its sales in Europe. We're not at that point right now, so China and India are quite happily buying this cheap oil and gas that's being offered to them by Russia. But at some point over the next 6 months or so, we will get to that situation where the US and the rest of the Western world, the G7 as you want to call them, they will start applying secondary sanctions onto every other country outside of Russia. And that's the point when the sanctions loop will be completed, and that's the point when Russia will really start feeling the pain. And if you look at what's happened in Venezuela and Iran and Iraq and Cuba, they've all suffered a massive downturn in their economies as a direct result of these sanctions. So it will happen. The sanctions will kick in. They will cause Russia major problems. It might not be immediate. It might not be during 2022, but it will happen at some point over the next 18 to 24 months. So I'll keep you posted on any further news and developments with regards to sanctions and those secondary sanctions. If you've liked what I've said today, then please give me a thumbs up and don't forget to subscribe if you haven't done so already. Hey guys, just a quick update on Joe Blogs 2. As you know, we are live now. So if you're interested in making a video, if you're thinking about making something and you'd like to post it, then please contact me through the About section and hopefully we can get your video up there sometime soon. So thanks for watching this part of the video and thanks for watching this whole video all the way through to the end.